It's time for our conversation right now. I will be speaking about the insurance sector, the insurance industry, which normally should be a big industry. In other climes, bigger than the banking industry. But here in Nigeria, it's the other way around. My guest is Samson Davies, who is the Group Chief Executive Officer at True Nigerian Experience Limited. He's an insurance practitioner for many years, many years. Good to see you, Samson. How are you?
Very well, Nancy. Thanks for having me here.
How are you doing?
Not bad.
Not bad. Will your colleagues in the insurance industry be saying that right now? Will your colleagues be saying that right now? I guess that everyone is running helter-skelter, helter-skelter. Where will they get the money from? Helter-skelter, if you check perhaps their blood pressure, now it would have gone up.
Well, I think there's a little bit of liberality on the part of the regulator this time. The last time the National Insurance Commission introduced what was known as the insurance capitalization back in 2005, July 6 precisely, during the Chukuma Soludo era. There was no room for anyone to still play with the then, capital base. At that time, the capital base was 150 million naira for life assurance companies and 200 million naira for general insurance companies. If you are to operate both life and general, you have to have 350 million naira capital base, at that time, and they were given 18 months up until February 28, 2007.
7 years.
At that time to recapitalize. And good enough, dollar was 134 naira at that time. So there was no room for, if you still want to play in the market with your current capital base of 150 million naira or 200 million naira or 350 million naira, then you are free to. The rule at that time was simply, if you are a life company of 150 million naira, you must now have 2 billion. If you are a general insurance company of 200 million naira, you must now have 3 billion. If you are a composite insurance company of 350 million naira at that time, you must now have 5 billion. That was when we moved to the 5 billion to the billion naira mark.
Yes.
And then even for reinsurance company at that time, they only capitalized 350 million naira. They were requested to recapitalize to 10 billion at that time. Now, the new model being introduced by NICOM, which is the National Insurance Commission, the regulator here in Abuja, still permits some of the players to play with their current capital base, just in case they can't play in tier 2 or tier 3, or tier 1 rather. Take for instance, if you take the tier 3, the tier 3 still accommodates life assurance companies to be capitalized to 2 billion, and general insurance companies to be capitalized to 3 billion, including composite for 5 billion. However, they can only underwrite some segments, some kind of product. They can't underwrite the entire product any longer, which are mostly individual products. For life companies of 2 billion from January 1, 2019, according to the guideline that was released, life companies will only be able to underwrite individual life, health life, and any other miscellaneous insurance under the group life scheme, mostly retail products, for the life businesses. And for the general insurance, the non-life aspect, they can only underwrite fire, underwrite motor, underwrite engineering, and the compulsory insurance, policies, as introduced by NICOM. Same is for the composites, that those that still want to stay with the 5 billion can underwrite both those individual businesses and then, just like I've mentioned, for general and life. Now, if you go to tier 2, NICOM is telling you that for you to be able to underwrite businesses beyond individual policies, take for instance, they introduced group life. That for you to be able to underwrite group life going forward as a life assurance company, you have to have a minimum of 3 billion naira, no longer 2 billion. Now, if you now want to underwrite beyond motor, fire, the compulsory insurances, as set out by NICOM. Now, and you would now want to underwrite policies like marine, policies like bond and shorty ship, you must have minimum of 4.5 billion. It's just 1.5 billion increase to be able to underwrite marine now.
But it's not just though.
Well,
that 1.5 billion increase to 4.5 billion.
Yes.
It's not just though, because the issue now will be that of raising capital.
Well,
do you understand? It's
yes.
not just nominal. Okay, just they will have to look for that just.
I think the industry has that liquidity. If you look at the margin of increment compared to where they are coming from the last time, they went from 200 million to 3 billion.
So the margin is not as
it's
much
not
as
the last recapitalization, and then the composite insurance companies under the tier 2 would only have 7.5 billion naira now, which is, you want to underwrite both individual life businesses, group life policies, you want to underwrite marine in general business, you want to underwrite bond and short issue, you must have 7.5 billion as a composite insurance
But
company.
If we're even looking at this recapitalization process, which NICOM has put forward, the question will be, was perhaps NICOM, from your opening statement, that NICOM was a bit liberal. Does that indicate that NICOM also considered the opinions of stakeholders involved?
Yes, I think recently there was, under the leadership of the new Commissioner for Insurance, there were new committees.
That's Mohammed Kari?
Mohammed Kari. There were new committees of insurance that was introduced, called insurance committees. There's a monthly meeting between the executives, chief executives of insurance companies and the regulator, where they discuss about deepening, insurance in Nigeria, where they discuss about issues, regulations, directives to be introduced, clarify circulars, and a whole lot of others. I think the guy at the helm of affairs at NICOM right now is quite fair. The entire industry, for instance, the entire insurance industry in Nigeria is 6,400 employees.
6,400
employees. And if you look at the entire premium income for 2017, calendar year, was about 363 billion naira.
Which is very, that brings me to my next question, which is, if you take a look at the capital, the overall capital of the insurance industry, which you've said now, about 360-something billion naira, and you look at how much recapitalization these insurance companies must recapitalize to, isn't it also very little? Because this is a sector that normally, like, let's say the United States, but people will say, okay, United States, they've been there for many years and all that. The insurance industry is even bigger than the banking sector. Here in Nigeria, the insurance industry is still crawling, 363 billion, as you said, the total capital of insurance. That's like one bank gone surfing.
Absolutely.
As it were, let me use that part so that people will understand what I'm saying. So you can understand what I'm trying to say. So aren't we also scratching the surface?
Well, I think it would take organic growth for the insurance industry to get to where the banks are today. Take, for instance, the banks too used to be mushroom arrangements.
Until consolidation.
Until consolidation happened and cut down from 89 banks to 25 banks. And those 25 banks today, if you realize, there are other areas that has been created for people even to play. And if you look at the total gross premium income for 2017 by the entire 56 insurance companies in Nigeria, put at 363 billion naira. That alone, is equivalent to $1 billion. Now, what is $1 billion in the Nigerian market?
And let's not forget that NICOM has a target to raise premium to 1.1 trillion naira. 1.1 trillion naira. Which is not feasible right now.
So if you look at what is happening at the moment, and even from the 363 billion, about 5 of them are responsible for almost 50% of that. Leadway, for instance.
About how many?
About 5 of them are responsible for almost 40% of the premium. Leadway, for instance, generated about 84 billion naira annually in 2017. Followed by custodian for the 3 billion.
You are giving them cheap adverts.
We're just stating what is quite obvious, because if you look at Axam and side, these guys generate about 27 billion, and then you have followed by AICO of 21 billion and mutual benefit of 13 billion. These are the guys that have been able to say, okay, grab a large chunk of the market. Now, if you also go further in terms of asset capitalization of the industry, the Lido is the biggest by 283 billion naira, followed by custodian of 81 billion naira. Between Lido and custodian, there's a gap in asset of over 200 billion naira. You know, however, considering it's the biggest insurance company on the Nigeria Stock Exchange, as a matter of fact, there are about 25 insurance companies listed on the Nigeria Stock Exchange.
I think we'll come to that and their performances because it's not even been that fantastic like other sectors. But let's come to the financing options now that are available to the insurance companies to raise capital. Isn't it?
Absolutely.
There should be available options to raise capital.
Absolutely.
What are the available options now?
I think what would likely happen, if you look at the premium income for the industry, a couple of them would only remain in tier 3. And then a few of them that are already playing big, you know, generating premium income in excess of 10 billion, you know, would definitely be able to play in tier 2. For tier 1, what NICOM has said is that for you to be able, as a life assurance company, for you to be able to sell group life, and for you to be able to sell annuity going forward, you have to have 6 billion naira on tier 1. Now, for general insurance company on tier 1, NICOM is saying, guys, you must have 9 billion naira for you to be able to underwrite marine, bond,
that's from 3 billion to 9 billion, I guess.
Marine, bond, shorty ship, which also includes oil and gas and aviation. You know, and for you to be able to underwrite both, just in case you want to retain your oil and gas policies, you want to retain your aviation policies, you want to retain your group life policies and annuity policies, you have to have 15 billion naira. Now, if you look at the market share each of them has, you know, from the 363 billion naira that was generated in 2017, a few of them would easily pass, you know, in terms of they already have, you know, the liquidity.
So are you saying that some of the insurance companies have the liquidity
to
be able to raise their recapitalization?
Yes, some of them might not necessarily need to even raise anything.
Raise capital.
So what will just happen?
A whole lot of them would do.
Absolutely.
Because you've just said about 5 of those 5 insurance companies dominate the landscape.
40%.
About 40%. What happens to the remaining 60%?
So what they would only do right now, the same way we have about 4 categories of banks in Nigeria. We have the commercial banks, we have the merchant banks, we have the microfinance banks, and we also have the mortgage banks. You know, the same way they too might have to specialize.
So are you foreseeing mergers and consolidation amongst insurance companies?
What I'm foreseeing, I'm not foreseeing a lot of them would not want to merge. They will still want to find a way to stick to their policy. Take for instance, if you generate 10 billion naira as an insurance company, and a larger percentage of your 10 billion naira comes from motor, you know, which you can underwrite with the 3 billion naira, you know, capitalization, you really don't need a merger. You know, if you realize that you are really not playing big in the group life market or in the marine bonds, you know, and aviation or oil and gas market, you may not really need to recapitalize. The problem will be for those that have a chunk or have a share of those big risks that will now lose it completely, you know, to the guys in tier 1 and majorly. So right now, what I am seeing is everybody will still want to operate like a bank. If you go around Abuja, if you go around Nigeria, you see a lot of new banks now that you are like, when was this registered? But unknown to you, they are not commercial banks. Some of them are just merchant banks.
They play in their own category.
They play in their own category.
But we also, just like we also have, like you said, in microfinance, we have unit microfinance, we have regional
states
and
all that,
Yes. So are you saying that insurance companies can also have the option of doing
as
that?
As a matter of fact, rather, there was a certain bank, you know, I don't want to mention the name, that during the capitalization period scaled down to a regional bank. You know, and I think through the organic growth, after some time, you know, they came back to national. So
I know the bank you're talking
about. You know what I'm saying? You know, so ideally, a couple of them might have to stick to the tier 3 right now, based on what they have, you know, and what they can underwrite. Because the problem is actually claims is only payable with cash, with liquidity. If you look at the financials of most of the insurance companies, only Leadway can boast of 29 billion naira in cash, you know, from their 283, you know, billion naira assets. You understand what I'm saying? So a couple of others really don't have.
If you take a look at the insurance industry, you know that a lot of challenges have plagued the insurance industry in the past.
Yeah.
few years.
Yeah.
The challenges of claims,
Yeah.
the challenges of inadequate capital, the challenges of even the culture of insurance in Nigeria. You ask an average Nigerian, are you insured? God is my insurance, you know. Do you have even motor insurance? They will get to you, I think, the third party insurance. So those are some of the problems that have plagued the sector. How do you think that the sector can turn around from all these inherent challenges, social, cultural, economic challenges that are plaguing the industry to be able to witness organic growth, or sometimes even forget the organic growth and move to engineered growth?
Now, let's pick the biggest insurance company in the world, for an example. The company is called Ping An of China. Ping An of China currently generates in excess of $100 billion as premium income in the last financial year. As a matter of fact, they were selected in the Forbes Global 2000 that was released for 2018. Now, what's responsible for Ping An's growth? 20% of Ping An's revenue comes from an IT-based sale approach. Ping An is using both the two-pronged approach of the financial angle and the technology approach. Whereas about 20, you can imagine if 20% of their revenue is coming, via what we call the internet in Nigeria, which is the internet of money. Or, abroad. The only thing most of us do in Nigeria lately is just social media. And social media is quite heavy right now. These guys are penetrating this market to push out. If you look at the data on the social media statistics alone, Facebook has about 2.5 billion users, monthly active users. Instagram has over 800 million monthly active users, grossing to about a billion right now. Now, these are channels that could deepen the industry. Now, it happens that I attended a strategic program, an executive program, at Harvard University, not quite long, Harvard Business School. And the focus program was on strategic marketing management. Issues were discussed around people complaining about not being able to generate the right revenue, not being able to match up, expenditure with revenue, not being able to. Fantastic products have been created, but people are not buying. What's the problem? What's the reason? What's happening? What can we do? Now, Harvard created a couple of focus programs where you can attend, to seek knowledge, which is not as much prevalent in the insurance market. A couple of the CEOs in the banking sector have had 1 or 2 focus programs. So
you're saying that the leaders of the insurance industry are not, reinventing themselves, seeking knowledge? Is that also what is impeding that sector?
That's quite prevalent and very possible, going by. Even the regulator is fighting the industry when it comes to leadership. The regulator is insisting on a 10-year exit tenure.
Yes, just like the banks have.
So insurance is still going through the phase the banks, went through the other time. There used to be family-owned banks, back, before 2005. Insurance is still battling that phase, where there's owner-managers, where there are sole proprietors.
But if you take a look at it, must also the model for insurance mirror the model used for banks? Being that the banking sector and the insurance sector are not on the same playing level right now in Nigeria. That's one question. The other part of the question is also, is the timing of the recapitalization right? Yeah. Was it a wise decision from NICOM, or was it a mistake at this time?
Now let me take both insurance and the banking sector for an example and illustrate that. The GDP of Nigeria today is about $4 or $5 billion US. From what we have discussed, the contribution of the insurance industry, which is 363 billion naira for 2017, is about 0.25% of Nigeria's GDP right now. Now, if you combine both the banking sector and the insurance industry together,
which is under financial services,
they both contribute less than 3% to the overall GDP. Services sector contributes about 55%,
52%,
to the country's GDP. So the question is this: both industries have not really done banking or insurance the way it is done globally. We seem to be reinventing ourselves from more or less in a vicious circle. We've not been able to break the highs as to what's happening in the world. How are the Munich Re's of the world doing it? How is the Pinggan in China doing it? You know, the global competitors, how well have we, partnered with them? How well have we even gone out to seek knowledge, in terms of that? Now, if you come to the issue of if it was the right timing for the industry to have done the recapitalization, there would never have been a better time. As a matter of fact, the last recapitalization in this industry was 11 years ago.
So
it's overdue.
It's overdue. But do your colleagues think that, those you've spoken to,
well,
do they think that they are fighting it in one way or the other?
No, I'm not sure they're going to fight it the way it was vehemently opposed, in 2007. Right now, there is a room for you to still play. The industry.
So they are not totally against it. Those you've spoken to, your colleagues.
Of course, if you guys have had conversations with, of the opinion that whatever way it is, at least we are given a room to play. The last recapitalization, nobody gave room to anybody to continue with the current capital base. If you can't upgrade to the billionaire mark, they withdraw your license.
Now that brings me to the question of, do you foresee job losses in that sector right now, since that companies in the insurance industry trying to raise capital, they also try to shed some weight in terms of perhaps also while you're raising capital, you're also trying to be profitable, you're also trying to also pay claims of your clients or your customers and all of that. So do you think that there will be job losses? Bear in mind that you said that the sector contributes about 6,400 jobs.
Yes. Well, in terms of job losses, I think that will be driven by the personal decisions of employees of each insurance company.
Employees or the companies themselves?
No. Reason is this. There are a couple of insurance practitioners that have spent sizable number of years in that industry or with a particular insurance company. He might feel he has more to offer an insurance company than stay low-key in an insurance company that only underwrite individual policies. He might feel he should be playing, with the tier 2 or the tier 1 insurance companies. So, ideally, I'm sure you are aware there are running policies at the moment that also require, some form of expiration, and renewals and all that. So what I foresee is there may be likely for those that are able to talk to themselves, to say, you know what, I have oil and gas business, you have oil and gas business. I have group life business, you have group life business. So that we don't lose it to the tier 1 guys. Is it possible we come together so that we can underwrite? And let me tell you, when you talk about job losses.
So you're talking of mergers now?
Yes. Now,
but I'm talking about job losses. Because like what we saw in the banking sector, consolidation time, a lot of people lost their jobs.
Yes. Now, let me tell you.
Are we going to see that kind of thing in the insurance industry?
Now, the job losses that will mostly not happen at the lower cadre. The larger percentage of employees are in the lower cadre. If another company A is merging with company B, the same drivers that drive in company A, can drive in company B. If you go to the middle management staff, which are the middle managers, both of them have admin officers. So there might have to be a redeployment, of some back-end staff to marketing to say, hey, go out there and generate money. The most people that will lose their job, when you talk about, most times when you hear about job losses, it's mostly the heads that go, because there can't be 2 MD when there are mergers and acquisition. There can't be 2 EDs for a...
So the leadership...
So the leadership, yes, will be more affected.
Now, let's take a look at government's side of the story in this insurance industry, because we know that what we're seeing from the government right now is a seemingly lack of will, as it were, to insure their assets, isn't it? And we also have the no premium, no cover policy. How do you think that this can also affect the sector? Because how many government buildings are insured?
I must tell you, a lot of government buildings are insured.
They are?
Statutory.
Now?
Yes. I think when Mohammed Kari, the new CFI, came in, he was able to, get the government to insure and also advise them. So statutorily, the head of service does group life for all public servants. And also statutorily, if you look at the budget breakdown, there are provisions for insurance.
And for insurance.
You know.
Is it well carried out?
Absolutely,
that's
it
the other
is.
thing.
It is.
You know?
People play in that sector. People bid. The Bureau of Public Procurement, people submit bids, they review bids, you know. There are publications from time to time. And NICOM has even taken a position to even advise government on where, on who to place their risk with.
Yes, that's also what I was coming to.
Yes.
That's another
issue entirely.
Yes.
So the no premium, no cover is to bridge the huge disparity in gross premium rating and gross premium income. So you find situations where an insurance company tells you, we have 20 billion naira gross premium rating. The question is, where is the premium? So by the time you're looking at the gross premium income, you only realize they only earned maybe 5 billion naira or 2 billion naira or 3 billion, and then the other is captured under receivables. And the moment, if their government exposed insurance, premiums, you may not be able to get them, especially when there's an outgoing administration. So the new administration might only be willing to pay, But I know quite well government pays for this, and a larger chunk of the group life comes from the head of service.
2017 was a very challenging year.
Yeah.
For the insurance industry, being that, okay, the country just trying to recover from a recession, we still have a fragile growth. How do you think that the economic recovery process, which is still on right now, and the election season, which is just by the corner, would also affect the sector? Or will the sector be insulated from the election season?
Now,
not totally insulated from economic recovery? Yes.
Now, let's look at the records of the entire industry in the last 3 years, including the period of recession. In 2015, the industry generated about 311 billion premium income. In 2016, they generated about 316 billion. In 2017, they generated about 363. So where's the impact?
So you're saying it won't have an impact?
Look, there are most of the policies.
Don't you think it also depends, your clients, even the companies themselves, and even the retailers, as it were?
Look, people want value. Let me give you an instance. There are certain incidences that the insurance industry needs to capitalize on.
People want value. Has the insurance industry given that value addition? Has the insurance industry been able to create scale and also add value? That's the other thing.
Now, the industry, from my perspective, is not fully exposed when it comes to the gains and achievement of that industry, of the insurance industry. Take, for instance, most of the cars that got burnt on Otedora Bridge were insured by 1 or 2 insurance companies. They don't celebrate when most of these claims are paid. Like make a lot of PR noise about we were the people that insured 10 or 2 or 3.
But there are also many complaints of many claims that are not paid.
There are also fraudulent claims. Don't.
Yes, I understand that, but there are also genuine claims.
Yes, now
which take time to settle.
Now,
those are some of the issues too that Nigerians have and say, let me just stay on my own.
You see, how do we buy insurance outside Nigeria? And I'll give you an idea. Everything about sales, everything about marketing is innovation. We've not been innovative enough in terms of selling these policies, especially the insurance industry. The industry has been run and managed by the same set of guys for quite some time. So there is need for an evolution in that industry. There is need for some kind of new thinking in that industry. That industry needs to create new set of products, tailor-made specific products. What is being sold right now are mostly generic products. Are the products you and I have known forever. You only get to understand or get to be bothered about your insurance policy when police stops you on the road. And that's when motor or third-party insurance comes to your mind. I remember when I joined health insurance in 2004. Back then, people don't even want to buy insurance. Everybody just wants a third party. People don't understand that they can be compensated when their vehicle is stolen.
That's why I said earlier on the issue of culture also comes in. Then awareness, education, just what you're saying, innovative policies or innovative products coming in now from the insurance sector that will also fuel their growth in one way or the other.
As I speak to you, I think there are a couple of coalition, within the insurance industry sponsored by the association, the Nigerian Insurance Association. I'm seeing some joint adverts. I'm seeing a couple of things that the association too has done, but possibly they can do better than that. You know, what Nigerians want, most of insurance benefits are subjective, are not as objective as they should. You know, so when you tell people, you know, to pay you money, and then they will get their compensation when there is an incident or when there is a tragedy. Insurance is now being sold beyond when there is a tragedy. Insurance is now being sold as a benefit. You know, the only way we sell travel insurance in Nigeria is when you're going to the embassy. There are better ways of doing that, you know.
So, in a way, invariably what you're saying is that the election season will not affect, because I want to get your take on that.
As regard the election season, it's a global thing. Anywhere there's election, you know, people tend to be careful with spending. But election season will not stop me and you from renewing our third party or comprehensive insurance policies if our certificate has expired. Election season won't stop me if I'm bidding for a project that I'm required to bring a bond, either advance payment bond or performance bond. It won't stop me from going to that insurance company to say, I'm going to be paid XYZ amount to please. I need your insurance bond. The election season is not going to stop all that.
Okay, so let's talk about the issue of the companies listed, the insurance companies listed on the stock exchange. They are not doing really well compared to their banking counterparts. We see that even a lot of insurance industries, or insurance companies rather, are still around 50 kobo per share. I think Universal Insurance was just lifted from suspension at the Nigerian Stock Exchange for having failed to file their papers and all that. And you see that a lot of insurance companies are guilty of one thing or the other. Yeah, their share price isn't that is reflecting the condition of the industry, because it's been like that for a while. Now, apart from a few insurance companies.
Good. The Nigerian Stock Exchange, the Nigerian market capitalization total is about 13.4 trillion. In that 13.4 trillion, there are 25 insurance companies listed on the Nigerian Stock Exchange. The total valuation of the 25 insurance companies listed on the Nigerian Stock Exchange is 1.6 billion naira. So you can imagine the margin. And if you look at it, about 5 of them, if you talk about the biggest by market cap, you know, vis-a-vis their premium income.
That's
Custodian.
1%.
Custodian, for instance, is the biggest by market cap. They're estimated about 32 billion at the moment. After Custodian, you have AXA Mansard of 27 billion, you know, followed by NEM of 16 billion. As a matter of fact, Continental Reinsurance is estimated, you know, to be valued at 18 billion. On the
so what are you trying to say in essence, that their prices are well valued compared to their performances?
The issue is this: the banking sector. Don't forget the bubble in the industry, in the banking sector that happened in 2008 came from the banking segment. You know, the pumping of shares that was done by the bank were not done by the insurance companies. Insurance companies really didn't have some of, you know, the share boosters. You know, they didn't have.
Let's just say they didn't have the razzmatazz of that time.
They didn't have the share boosters that the banks had. So it's quite, you know, knowledgeable to you and I when you see there are banks that were sold at 34 naira per share, you know, in 2008, 10 years ago, and all that. But where are they today? They are no longer, you know, they've either been acquired or taken over by government. So the point is really not about your market cap. If you're talking about market cap today, Apple is the biggest in the world, $851 billion dollars rather. Yes. You know, but when you come to revenue, Walmart is the biggest in the world, over 500 billion.
So are you saying it doesn't matter?
So
are you saying in essence that your sector is doing well? Is that the consensus today?
Well, what I can say is that this sector can do better.
What do you think could be the worst outcome out of this recap story?
The worst outcome would be a couple of insurance companies being downgraded to tier 3.
How about the best outcome?
The best outcome would be for us to have like 10 or 15 tier 1 insurance companies.
Okay.
You know,
Okay, just before we go, one last question, and
Yeah.
I hope, what question are you most asked about the insurance sector? What one question are you most asked?
Why do I have to insure?
I knew that would come.
You know,
Why do I have to insure?
Why do I have to insure?
Which goes back to what we said
What we said
earlier.
earlier. So people really.
Why do I have to insure?
People really are not connected to the insurance market. People really are not connected to the benefit. And
Okay.
most of the reasons are because there are no immediate benefits, with insurance companies. In the banks, there are immediate benefits. If I deposit 100K today in whatever bank account I have, I can get it. I can even withdraw it the following minute.
Yeah.
But if I pay 100K to an insurance company, I'm being told until my car somersaults or get burnt on a $100 bridge. So if the industry is able to create some benefit around me paying them 100K, which was one of the things we did in 2004, through product development and innovation.
Something many